let's move our focus and look at the latest financial news driving the Nigerian FX and fixed income space. And for that, we are joined by Nwabueze Okonne, a currency trader at UBA. It's great to have you on the show, Eze. I'd like to start with an update on the naira today. Of course, many expected the naira to weaken slightly, especially as liquidity thins out.
Naira overall for the week, I actually would say gained a bit, marginally. It did weaken into the trading session for this week, hitting a high of 158.68, but overall it closed at 158 even. From the auction result at the CBN end, you see CBN offering 600 million, selling 545 million, less than what was offered. Shows that demand is actually winning a bit. Outside of that, we had a couple of oil offers coming into the market that has supported the currency so far. On naira weakness, I'm not among the school of thoughts of naira weakness, because after the MPC, I thought that was a bit of more confident booster with the decisions that we made at the MPC, and I felt that that was going to be a strengthener for the naira. Maybe not immediately, but overall, I think it was going to put the naira into the trading range that it's been doing for most of this year.
However, of course, everyone's still talking about the AMCON refinancing plans, and some fear that the plans could lead to some currency depreciation. So what's your view?
Yeah, I wouldn't remove that concern about AMCON and the amount of naira that will put into the market. That in about 6 months' time, we'll see about close to more than 1 trillion naira coming into the market. But I would say, taking from example of what the CBN has done, earlier this year we had close to 1 trillion naira maturing into the market from government securities, and overall there was really no blip in the currency movement during this range. I don't think that we would have any much effect in terms of the AMCON repayments by the central by AMCON to the banks at the end of this year. Definitely, yeah, looking at the maturity profile so far, it seems as though this year has some huge maturities coming in. But overall, going forward, we see that the government borrowing is not really going to be local, but more offshore. That's going to reduce the amount of debt required by the government from the local players, and overall, that's going to help in smoothing out the liquidity that comes in. CBN has been fantastic in mopping up in doing liquidity management, and I think that they will continue with their activities.
Now, we saw yields closing marginally higher at yesterday's primary market auction, with CBN selling a total of 157 billion naira. Now, I hear there was another OMO auction today, so give us some more insight into that.
CBN has actually been doing OMO for almost all day this week, except for 1 or 2 days. So far, they've offered the market about 300 billion, and they've mopped up about 300, slightly above that, about 320 something billion. Interesting for me is the range, as the yield at the OMO auction, stable at 12.3%. I remember that this OMO auction, when CBN had to introduce some special OMO auctions, we saw yields climb up to 12.5, 12.75. Now we actually see a slight ticking down in the yields.
So where do you think yields will go next week?
For next week, I don't think with the bond auction coming into play, we might see yields continue to do some slight upticks, but I don't think overall we'll have any material change in the range of yields. For me, I would always look at the range of yields for the primary auction, 91 into 364 days, between 11 and 12%. For the on the secondary side, I would see maybe an uptick into 12% on the shorter end, which is basically affected by the liquidity in the interbank market. Outside of that, I think the range of yields capping at 12%, 12.5% still holds for the near future.
Okay, let's talk about bonds. After a few days of positive sentiment and slight gains, we saw prices in the bond market trading lower yesterday, with a focus on the short to medium tenors. Now, give us an update on activity in that space.
Well, truly, like you said, on the shorter end of the bond curve, it was very steep. It actually lost a lot, close to like 30 basis points. Medium term, practically flat. Longer term, we saw some slight gains in the longer end of the curve. That's not different from what typically seasonality you would expect, especially when an auction is coming up, and you expect some sell-down positions, traders positioning for the new intake, given the fact also that you have uptick in yields at the primary auction on T-bills. You would think that a bit of those upticks might filter into the bond auction coming up also. So if you look at the movement that's happened, I really don't anticipate any major shift. I think all the correction that has to be done in the market it has already taken place. Next week, I think I'll see a stable yield, and over the course of the week into the upper week, I think you might have some bulls coming into the market.
So do you expect that rates in the money market will continue to be controlled by liquidity levels?
Oh, sure. Like for the money market, we've had the overnight and the OBV, the secured lending rates hover around the CBN lower limits on the corridor of this 10.25, 10.5%. Not forgetting that cyclically, we have liquidity coming into the market during this period. That might actually go out a bit next week, but I think it will be evened out by the maturities in treasury bills, which will have about 200 billion coming in on the treasury fund next week. I think CBN will come in there with good liquidity management space. I don't think we'll see yield pushing out way out of the normal range. Overall, for the yields in the money market, in my opinion, still continue within the range that we've seen so far of a 10% and a 12%. So for the short end of the curve.